Hello, this is Megan Horneman, the Chief Investment Officer at Verdence Capital Advisors, coming to you with our Markets with Megan. Today, we're going to focus on the Federal Reserve. They met and they delivered a rate pause, which was widely expected, meaning that they, after many consecutive meetings with rate hikes, they decided not to raise rates at this meeting. As I said, this was expected in the meeting, but why the markets are taking this in a negative way and why we're seeing a lot of volatility is because their notes, their projections for their forecast for the future showed that instead of seeing rate cuts this year, actually there's the chance that we may see 2 more rate hikes. The markets were not expecting that. The markets were expecting the Fed would pause, they would stay on hold, and at some point in the second half of this year, they would actually be cutting rates. So now there's rate hikes, additional ones baked into the market. Also for next year and even 2025, the expectation that the Fed had at their March meeting for where the Fed funds rate would be in those years is actually higher now. So we've been talking about the dislocation between the equity market being too optimistic about the Fed's ability to come in and cut rates, and we're seeing that transpire today in the equity markets. Inflation is not where it needs to be. They mentioned this in their press conference and in their statement. They need inflation to come down. They need disinflation in the housing market, in the service sector, and until they get that, they can't take their foot off the brakes. They also made a comment that July is a live meeting, and when they state that, that means that be prepared, they can come in and cut and raise interest rates at the July meeting. So we think the Fed did the right thing. They delivered this pause with a very hawkish tone so that investors didn't think that rate cuts were around the corner. It's taken some of that optimism out of the equity market, and we're seeing some of those very high PE multiple stocks, they're coming down because of this. And we think this was actually a good report not necessarily for the equity market today as seen, but a good report for the economy. We have not thought that the Fed was completely done. We have not been in that camp, and we've seen that today with their report and the comments afterwards. That's all that I have today on the Fed. If you have any questions, comments, feedback, please feel free to reach out to podcast@verdence.com.